Okay, well, I want to say hello to everybody who's already entered into this workshop this evening, and I want to thank you for spending an hour of your time here on a Thursday evening after a long week to talk about another Money Matters topic. This has been an ongoing series throughout COVID that we at Family Promise of the Verdugos have been doing online. As a way to stay on top of our personal finances and to manage and continue to make smart money decisions as we tackle sort of the hurdles of COVID and managing our money in even more uncertain times, especially with the pandemic. Many of us had gone through job changes and job losses and all sorts of different sort of financial obstacles. And throughout this entire process, we didn't want sort of people to lose hope in the situation, in the environment, in the new ways that we were having to sort of live and work and manage our households, manage our finances. And so we've been doing this ongoing virtual workshop series, if you will, over the last 12, maybe 14 months now. And today, this evening, we're going to be talking about how to improve our credit scores. Now, in the past, we've had a lot of conversations and discussions in regards to credit, in regards to debt, and we've talked about credit scores. We've talked about credit reports. But what I wanted to do tonight is focus specifically on what is within our control to actually raise and improve this sort of mysterious, sort of unknown credit score system. I think to a lot of us, we know how important our credit score is. It helps us in borrowing new funds. It helps us be able to make larger purchases in life, whether it's a vehicle, whether we're considering buying a home, whether it's getting a credit card, whether it's managing other debts. Like, our credit score is very, very important to our personal financial health. And it seems to sort of escape us as to how we can raise our score, especially when maybe perhaps in the past, we've made some money mistakes. We've had some late payments on some credit cards. Maybe we had some of our debt go to collections. Maybe we just stopped paying on some of our debts altogether. And now what we're maybe trying to do is recover from that. So the question becomes, Bryan, how do I overcome those past mistakes, not let them continue to haunt me? How do I change my habits going forward? And how do I begin to raise my credit score? I'm thinking about buying a new vehicle here shortly. I don't want to have to walk into the dealership or walk into the place where I'm buying a car and get rejected from financing because I'm such a risk, because my credit score is too low. I don't want to have to deal with these kinds of stresses. What can I be doing to take control of raising my score, and how is it possible to actually get that score to start moving up? Oftentimes, we don't even want to check our score because we're so afraid to see what that number is. It's sort of like a personal judgment on us as people. Like, if I see my credit score at, I don't know, in the 500s, then somehow I must be some kind of financial failure. That means I'm a failure as a person. I'm not doing my job as a parent, as a spouse, as a partner, and so on and so forth. So we almost sort of keep that score out of sight, out of mind, okay? If you've ever worked to improve that score, it's just as elusive. It sometimes seems like it's black magic. What we do know about scores is that they range anywhere from 300 credit score, sort of spectrum, if you will. And that anything under a 550 is considered to be not a good score, okay? You're probably not going to get financing for a major purchase. Lenders aren't gonna want to allow you to borrow because you're a risk. Okay. Anything above a 600, now we're getting into a better range, right? 600 to 800 is, considered to be a higher excellence score. Okay. But then sort of after that, sort of knowing how the scores work, that's sort of where our knowledge ends, where it stops. And it's easy to assume that we really don't have control over raising this score. It drops, it plummets like a rock based on some mistakes that we make or some bad behaviors. But what can we actually do to get the score to go up and increase? Okay. In reality, our credit score is actually based on very, very real, very measurable criteria. And if we know what that criteria is, we can absolutely have the power to change that. Okay. In fact, most of us are actually in a position to improve our credit score with very little effort. We just don't realize it because, like I said before, we're constantly trying not to look at our score. We just don't want to deal. Again, out of sight, out of mind, ignorance is bliss. But we are actually in a position to improve it. So let's talk about that. What can we do to start getting this score to go in the other direction? Get it to go up? Well, there's 4 things that we can focus on that are within our control, okay? We can get a copy of our credit report. We got to know what score we're working with. Let's see that score and let's see what's on our credit report, okay? We have to sort of step back from it, view it non-emotionally, view it objectively and say, okay, are there errors? Are there mistakes? Are certain things in collections? Have I not been paying on time? What is my current sort of credit situation? And by getting your credit report and seeing that credit score, now we have a starting place, right? We can't get from A to B without knowing where we're currently at. Where is A, right? Number 2, we can change our credit limit. And I'll tell you why we are going to want to do that here in just a second. Number 3, if you don't have your debt on auto pay, one way to help improve your score is going to be to make sure that you're paying your monthly bill on time and before the deadline. Simply establishing that routine, and by using a simple tool like auto pay, it gets us to be systematic and habitual about making on time, timely payments, because that's going to affect our credit score as well. And I'll show you that in just a second. And number 4, keep old accounts open. We've talked a little bit in the past about, Brian, should I cut up old credit cards? Should I close old accounts? And my advice has generally been, there's no need to necessarily close those accounts. You can certainly hide those credit cards away in a dresser drawer, put them in the freezer, wherever it's sort of out of reach. But keeping those old accounts open can actually help one of the factors that goes into the calculation of our credit score. So let's start looking at each of these points and see what our credit score is actually based on, okay? You can get a free copy of your credit report numerous different ways, okay? It could be through your bank. If you bank with Wells Fargo, Chase, Citibank, a lot of them through their mobile banking apps will give you a tool to access your credit score. If you have a certain credit card, Discover, they are always advertising that they give their customers free credit scores, free credit reports. If you don't have any of those tools at your disposal, you can simply go to a website, annualcreditreport.com, and you can pull a free credit report with your credit score, okay? And the reason we want to do this, and the reason it's so important, is that the credit report is not only going to give you your score, but it's going to show you why you have the score that you do, because the credit report is going to show you the types of credit you have in use. Are you borrowing for a car? Do you have a student loan? Do you have credit card debt? Who are your creditors? Where are you borrowing money from? So the types of credit or the types or of lines of credit that you have open will affect your score, okay? How long your accounts have been open. You can see, have I had this MasterCard, since I was 18? Or, is this a newer account? The age of your accounts and how long they've been open and your payment history on those will also go into the calculation of your credit score. You're going to be able to see how much money you actually owe, which a lot of people don't know. They know they have a number of credit cards. They know they've taken out loans in the past, but they seriously don't know the total amount that they owe. That goes into your credit score, the calculation of your credit score as well. And your payment history. Your payment history tells other creditors and lenders who you may be asking to borrow from, how timely have you been on your payments? Have you been just making minimum payments? Are you paying off balances in full? How many months are you late on a payment? How behind, right? How efficient are you in paying back your creditors? All of these sort of factors that are being reported on a credit report go into calculating your score. So I noticed there are potentially some hands in the chat. So I'll pause right here before we move on to what we can do to raise the score. And maybe there's some questions that I can address now. No, we're all good. Okay. And I know that Lisa is managing that as well. So let's keep moving. Okay, so the first thing that we can do is we can change our credit limit. Why would we want to change or increase the amount that we can borrow, increase our credit limit on consumer credit cards? There is something called utilization ratio. So credit card companies look at, based on what you're allowed to borrow, how much have you actually borrowed? So if the total of your cards has a balance, a limit or maximum of $10,000, credit card companies and your credit score is based off of how much of that 10,000 have you used? Have you utilized? Are you maxed out at 100% and you've borrowed the full $10,000 and you're trying to pay that back? The optimal number to be at or to be under in order to raise your credit score is 30%. Okay, so right now, if you're maxed out and you're using everything that companies are willing to allow you to borrow, the way to get or lower that percentage utilization is to increase the credit limit. So you can call your credit card companies and say, look, can you give me a higher limit? On this particular card, my limit is $2,000. Can you raise it to 3? Can you raise it to 4? So the point is to ask for a higher credit limit, not so that you can just keep borrowing and keep racking up your debt, but so that the higher limit will then lower the utilization rate and take you from maybe 100%, maybe down to 50%, or optimally under 30%. And when you do that, when it shows that, look, you still have the ability to borrow if you need to, it will help increase your credit score. Otherwise, constantly being maxed out on your credit cards affects your credit score negatively, right? Because there's nothing left to borrow. You've sort of borrowed the full amount. So you can decrease your credit utilization 2 ways. Call and ask for a credit increase, right? Or conversely, you can pay off part of the balance, therefore freeing up more credit limit. So some of you might be like, Bryan, I cannot put down a lump sum of money. I cannot put down a big chunk or sort of a large payment on my credit card. Okay, If you can't do that, the next best thing, again, is to call and ask for a higher limit. That will lower your utilization rate. So that's the first thing that we can do. That is totally within our control. The second thing that we can do, right, is set up auto pay. So whether or not you make payments on time, this is the single most important element in the calculation of your credit score. So on-time payments is absolutely critical. It is king, okay? So paying on or before the due date is gonna help set you up for a consistent, routine payoff schedule. That is gonna help increase your credit score. There's no single element that is more important in calculating your credit score than on-time payments, okay? So if you've been managing this manually, so you get a bill or a statement in the mail, and then you write a check or you make a payment online, hopefully before the due date. Maybe perhaps you're doing this because you want to control when you make a payment, and even if you can make a payment, depending on the time of the month. So sometimes our credit card bills are due, I don't know, around the 15th, in the middle of the month. And in the middle of the month, maybe you're finding that you're running low on funds. That may be a situation where, because you're managing it manually, you might opt to say, you know what, I'm going to have to make a late payment because I just don't have the funds right now. Or you may say, I'm going to miss this payment. I'm going to let it roll into the next month, and maybe I'll try to pay next month. Every time you do that, it is negatively impacting your credit score. So a way to better manage that is, if you're going to do it manually, pay on or before the monthly deadline. If you're not going to use auto pay, set a reminder in your calendar, set a reminder on your phone. I don't know, write a Post-it note, put it on the bathroom mirror, whatever it's going to take to remind yourself to make that payment. Because on time, scheduled payments, routine payments are going to help increase and raise your credit score. Okay. So a lot of us sort of neglect this factor in the credit score because we're sort of playing the nutshell game where we're shuffling payments, right? We're paying for one thing over here, we're skipping a credit card payment here to pay for this over there, and we're just sort of like shuffling our money around to pay different bills. Totally understand that. It happens to the best of us. But all the while we're doing that, our credit score is dropping because of that. So the easiest fail-safe on this is to set up auto pay. But you have to make sure then that if you have it on auto pay, that you have the funds to make the payment. In order to do that, you have to be managing your cash flow. So just a sneak peek for next time, 2 weeks from now, we're going to talk about some simple ways to manage your cash flow so that you always know and make sure that you're going to have funds to make these auto payments, right? Because the worst thing that we can do is set up auto payment, and then it's going to take take from our funds and pay our bill automatically, and for us not to have the funds. That's the worst thing. So in order to do that properly, we have to make sure that our cash flow is always positive, that we're going to have enough funds to make these credit card payments. Okay. Once we get a handle on that, then we can set up auto pay, and then we'll be making those scheduled routine payments on time, even if it's the minimum. Even if it's the minimum, that can still help you raise your credit score. Now, somebody a couple of workshops ago, when we were talking about credit and debt, made a very good point, which is, as you are managing payments on your credit card, perhaps what's easiest to not get into a bind is to only make very small, very minimal charges on your credit card each month. Buy one or two things that you know you'll be able to have the funds for when the bill comes, that you'll be able to pay on time, you'll be able to pay ahead of time even perhaps, and it's not going to be a situation where, oh my gosh, I have a $1,200 balance on my credit card, I don't have the funds to pay this, and you just are resorting to the minimums and interest is accruing, right? So maybe sort of tighten up your habits, your purchasing habits on the credit card as well. So setting up auto pay definitely helps, or if you're going to manage that manually, set reminders for yourself to make sure that that payment is in on time, because that will help raise your credit score. The last point is make sure that you keep old accounts open. Okay, this is probably the easiest piece of advice on our list tonight. Okay, because of a particular factor that is known as credit age. So something that a lot of us don't know is that credit age makes up 15% of our credit score. So the only way to increase your credit age is to keep old accounts open and avoid opening new ones. So let's think about this for a second. Why does credit age matter? Your credit score is based on a history of borrowing and a history of making timely payments. So the longer your accounts have been open, you've been stably making purchases and paying off those debts, sort of the more established and stable you are as a borrower, which makes you less of a risk for people to lend money to you. So it helps increase the credit score. Okay, so let's say you have some accounts that have zero balances. Utilize them for utilization's sake, but again, only make very few minor purchases, pay them off, but keep those accounts open, especially if you open that, I don't know, that Visa back in 2011, right? Don't close those accounts and then 2 months from now go, you know what, I'm gonna get a different credit card and open up a new account, because now you look like you're a rookie because you've opened up all these new accounts or newer accounts, and they don't have the usage history and the payment history that your older accounts would have had, right?
And sorry for interrupting. There is a question now. Vivian's asking, what if a store card like JCPenney, Sears, for example, is canceled due to the store going out of business?
Okay, in that case, that is not your fault, right? That was something that was out of your control. That was a card that was tied to a particular company, in this case, a department store that is actually now closed, right? Depending on that situation, maybe if you had a balance, it has gone to a company that is still collecting for JCPenney as an entity. You obviously can't continue to purchase on that JCPenney card because there's no stores that are open anymore, right? So in a case like that, it's not because you have ended that card. The company is closed. So if you're still having to make payments on any outstanding balances on that, continue to do that in a timely fashion. But obviously you're going to have other accounts that are not department store based, right? So you'll want to be sure to keep those accounts open, right? So even if it's this Discover card where you're like, I don't even use this card anymore, it has a zero balance, it would be worth just keeping it, especially if you've had it 5 years, you've had it 10 years. Use it once in a great while, sort of keep it established, and that will help your credit, quote unquote, age. Okay. So in this case, older is better. Don't rush out to get a bunch of newer cards, because then you don't have a long sort of standing history with payment and with usage. So these are the sort of 3 or 4 easiest things that we can do right now to help raise and increase our credit score, right? The other thing is, like we've talked about in the past, to go back into your credit report and make sure that it's accurate. There could be mistakes, errors from companies that those debts are not yours. And it's pulling down, it's dragging down your credit score. That's where you will want to go back to those creditors, right? Or to the credit reporting agency, like Experian, like TransUnion, and say, I want to dispute this. This is not my debt. Somebody was using my name. It's incorrect for whatever reason, right? Getting those off of your credit report will also help your credit score. But that's going to take some time. It's going to take some energy, and it's going to take some work. Whereas these pieces of advice are sort of simple and things we can manage like right here, right now. Okay, somebody asked a good question through Lisa just recently about, what if I see an error or I see something on my credit report that I'm trying to fix, and it's a debt that I haven't addressed in a long time? If I go back to that collector, if I go back to that creditor, does the clock start over on that debt? It's such a great question. What we sometimes don't realize is that our debts are on a clock. They're on a timeline, okay? And as we make payments, maybe we have stops, maybe we have starts. We pay a little bit here, we pay a little bit there, we're late on payments here, we're short on payments there, right? As long as we sort of keep that going, the clock is running on those debts. We may have debts that we haven't addressed in a long time. We got into a bad situation, we just didn't have the money to pay them, and we've sort of just stopped paying altogether. If we try to start cleaning that up, the fear is that if we go back and go to that creditor and say, you know what, I know it's been a long time, but I want to set this right and pay this off, will the clock restart on those debts? And yes, they will. They will. Because now you've contacted them and you said, I want to work something out. I want to make some payments. These debts are mine. You're admitting that because you're saying, I want to fix this. So you have to be ready for that. Okay. But in terms of errors, this is different because you're not admitting that these are your debts. You're saying, this is on my credit report as a mistake, and I want to be able to fix this and get this removed or resolved. By doing that, that is going to help improve, ultimately in the long run, your credit score. So that's a longer term action that we can take. But as for shorter term things that we can do in the here and now, these 4 pieces of advice, you can start tonight. You could get your credit report, your credit score from annualcreditreport.com. You could sort of look at when your monthly credit card bills are due, sort of map that out in your budget, in your calendar, and make sure that you're making timely payments. You can call your credit card companies and see if you can get an increase on the limit that you're allowed to borrow, right? Don't use it, but just get an increase that will help lower your utilization rate under that 30%. And you'll start to see your credit scores climb. It's not going to be by tomorrow. Okay. These are not fast, easy fixes. Within 24 hours, we're going to see a higher credit score. But over time, as we're working to improve our habits, these will help raise the score. So the next thing that we're going to talk about 2 weeks from now is simple ways to manage cash flow. And this is very, very important because it is connected to how we manage our bills. So the reason we get into trouble on the debt and the credit side is because we're not managing our dollars on the cash flow side. So what I'm going to show you next week is simple ways that you can make sure that on a monthly basis, these credit cards are paid off. So whether your goal is to pay the minimum or whether your goal is to just simply pay something on time, okay, managing cash flow is going to be key. So what this means, what does cash flow mean, Brian? Cash flow means how money comes in and is then utilized within our bank accounts in order to go out and pay for our responsibilities, to pay our bills, to take care of household items, to do our shopping, to do everything that we need to sort of survive and live and build for the future. So typically when we think of cash flow, we just simply think of money in and money out. Bryan, all I know is that I don't have enough money coming in, but I have a ton of money that needs to go out. Well, what I want to do is help you manage that in between the in and in between the out. And that's where people don't stick to a specific plan or a tool to manage their cash flow. That's when they get into trouble, because between the in and between the out, that's where money is just leaking out all over the place. They don't know where it's going. And then that's when we fall short of making timely payments on our credit cards and so on. So cash flow is absolutely critical to managing other financial areas of our life, right? So whether you're trying to make student loan payments and get rid of that, where you're trying to buy a new car, it all sort of hinges on cash flow. So we're going to go back to cash flow. I'll show you a couple of different ways that you can set up your bank accounts to work in conjunction with your spending plan, with your budget, right? So that the tools that you're using at your bank to manage your money are in conjunction with the responsibilities that you have, right? So every dollar is doing its job, and then you can have the peace of mind of knowing, okay, the income that comes in because of my hard work, it's going to not increase my stress because I don't have enough, but it's going to be enough because I've plotted out and I've managed where it's going to go at certain times of the month. And I have accounts that are set up in ways to make sure that I don't continue bad habits that I've made in the past. So that will be in 2 weeks. That will be June 24th. Again, Thursdays, 6 p.m. Lisa, can you let everybody know if there is a workshop happening in between from now until the 24th? So next Thursday.
Yes, so next week we're going to have a Safety Alliance group join us and come to speak to us about domestic violence services and what other community resources are available to anybody who might need that sort of thing. And it's going to be next Thursday, June 17th at 6 p.m. So I encourage you guys, if you guys would like to participate in that, I would highly encourage you guys to join in. And also remember that we are doing a gift card giveaway for a $25 gift card to the 99-cent store and a $25 gift card to Panda Express for those of you that want to get into that as well. There will be 2 winners, so it'll be the same as last time. So if you guys want to RSVP for the last 2 workshops that we have for this month, please do so.
Fantastic. Well, thank you again to everybody for attending this evening. I really appreciate it. Again, if you ever have questions, you can always reach out to Lisa. You can shoot her an email, give her a buzz, and she'll definitely either have the answers for you, find the resources for it, or she'll get those questions to me, and between the 2 of us, we'll make sure that you get the right resources that you need. So have a great rest of the week. I'll see you in 2 weeks, and I hope that you're able to attend next week as well.
All right. Thank you guys. Have a wonderful
evening. Good night,
evening.
everybody.
Good night.